Welcome back, guys. In today's video, we're diving into another smart money setup, where I'll show you how liquidity is engineered, how structure shifts, and how to time precise entries with confidence. Let's see how far I can scale this small account using Smart Money Concepts. In Smart Money Concepts, the market doesn't move randomly. It follows liquidity and engineered price action. Understanding where liquidity rests and how institutions manipulate it is the key to finding high-probability trades. Here on the 4-hour time frame, price has taken out the swing low, sweeping sell-side liquidity. Typical move to clear stops before a potential reversal or continuation. Sell-side liquidity below swing lows is often targeted by institutions to fuel the next directional move. After a sell-side liquidity sweep, confirmation, like change of character or break of structure, is needed before assuming direction. On the 5-minute time frame, price has broken the most recent lower high, confirming a shift in market structure and forming a change of character, indicating potential bullish intent. A break of the most recent lower high is a key early signal of a potential shift from bearish to bullish structure. And this was the order block acted as the key zone behind the change of character. And as expected, price retraced into it, respected the level, and delivered a bullish move to the upside. And from this point, price has continued its momentum by breaking structure again, confirming a break of structure and reinforcing the bullish market continuation. A break of structure, BOAS, confirms trend continuation, especially after a valid change of character. This is another valid order block formed following the break of structure, serving as a potential institutional entry zone for continuation. However, instead of retracing into the order block, price continued its bullish momentum and broke the most recent higher high, forming another break of structure, indicating strong continuation strength. Also, this is another order block formed as a result of the recent break of structure, acting as a potential continuation zone for institutional entries. This yellow highlighted area represents a fair value gap or imbalance area, and as we can see, price has already retraced into it and filled the inefficiency, rebalancing the market. This is the extreme imbalance zone that fueled the most recent break of structure, acting as the key area of strong institutional order flow. Additionally, there is another imbalance visible above. Unfilled imbalances often serve as price magnets, attracting price to rebalance inefficiencies. Just remember, not all imbalances get filled immediately. Context and structure matter. So as per my strategy, I have placed my pending limit buy orders from the extreme imbalance area. I've positioned my stop losses just below the order block, allowing room for mitigation while protecting the trade if the setup gets invalidated. Guys, as you can see, my pending limit orders remain unfilled at the moment. Now we wait patiently for price to deliver into our zone and validate the setup. Just remember, no entry is also a position if price doesn't reach your zone. As you can see, 3 of my pending orders have been filled, while the remaining 2 were left unexecuted as price didn't retrace into those levels. Price has already delivered in my favor and is moving towards the profit target. At this point, we're waiting for price to deliver into the most recent lower time frame liquidity target. Until that target is reached, we remain patient and see what happens. Now I'll be closing all active positions and securing the profits. Taking profits at predefined targets helps maintain discipline and avoids giving back gains. The first trade played out exactly as planned. Clean execution, clean profits. Now, let's shift our focus and break down the next opportunity the market is offering. So guys, on the gold chart, price has swept the higher time frame sell-side liquidity below the swing low and immediately rejected it, returning back into the range, indicating a potential liquidity grab and shift in market intent. Higher time frame liquidity sweeps carry more significance and often lead to stronger directional moves. Following the liquidity sweep, price on the lower time frame has broken the most recent lower high, confirming a change of character and signaling a potential shift in market structure. On the lower time frame, a valid order block has formed, and price has respected this zone multiple times, showing strong reaction and confirming bullish intent as it continues moving upward. This order block played a key role in the market shift, and it now serves as our primary zone for executing pending orders in alignment with the new structure. We can also identify a fair value gap imbalance in this area, which reflects the strong displacement behind the market shift and acts as a key zone of inefficiency. At this point, I'll begin positioning my pending orders across the imbalance zone, extending into the order block, to capture a refined entry within this high probability area. And put all the stop losses below the order block zone.
One eternity later.
Guys, as you can see, price failed to retrace into our pending orders and instead continued higher, leaving those entries unfilled. Now, we'll reassess the market and manage or adjust the invalid setups accordingly. Following this, the market formed a new higher high on the lower time frame, and with a subsequent break above that level, price confirmed another break of structure, indicating continued bullish momentum. As a result of this break of structure, a valid order block has formed in this area, and price has already respected this zone, continuing its move to the upside with bullish intent. This marks the next order block zone, where price has already begun to trade into the area. From here, I'll start positioning my pending orders, aligning with this zone for potential continuation. So I deleted the previous pending orders. So just like before, we will place our stop losses below the order block. Guys, as you can see, one position is currently active while the rest of the orders remain pending. At this stage, we'll let the market deliver and observe how price reacts moving forward.
Many tic-tacs later.
Finally, price has delivered into our targeted profit zone, so I'll be closing all active positions and securing the gains from this setup. With the second setup completed and profits secured, we now move forward, focusing on the next opportunity forming in the market. At this stage, price continues to show bullish strength, creating higher highs and maintaining its structure, indicating strong continuation. At this point, price has broken above the previous higher high, forming a clear break of structure. Breaking a higher high is a strong sign of bullish continuation, especially when aligned with overall market structure. This now defines our current order block zone, acting as a key area of interest for potential entries in alignment with the ongoing market structure. This area represents a clear imbalance, fair value gap, highlighting an inefficiency in price delivery and a potential zone where the market may react. This is another imbalance, fair value gap. Price has already retraced into this area and filled the imbalance. At this stage, I'll once again begin positioning my pending orders from the extreme imbalance zone, aiming to capture a refined entry as price retraces into this key area of inefficiency. Guys, at this point, all pending orders have been positioned accordingly, and the stop losses will be placed just below the order block to protect the setup, while allowing room for proper price movement. Here I've removed one of my pending orders to manage risk effectively and avoid unnecessary exposure that could lead to a margin call. As you can see, all my pending orders remain unfilled at this point. Now, we stay patient and let the market decide whether it delivers into our zones. This level will serve as my profit-taking target. Once price delivers into this zone, I'll close all active positions and cancel any remaining pending orders to secure the profits. As you can see, price executed 3 of my pending orders, and immediately after entry, it delivered a strong impulsive move to the upside, showcasing clear bullish strength and precision from the entry zone. If this breakdown helped you understand the market better, make sure to like, subscribe, and stay tuned for more precision-based trading setups.